I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, now part of Sapiens, enabling an enterprise view of exposure. It's been 3 years since today's guest has been on the show. In that time, the business he runs has doubled in size through a combination of organic growth and targeted acquisitions. Group CEO of Miller Insurance Services, James Hands, is looking for growth at a similar pace for the next 3 years, and this interview is an excellent 360-degree guide to how he plans to achieve his goals. A focus on specialty insurance and reinsurance, investment in people and expertise, and making the most of growth synergies from the firm's acquisitions are very much the order of the day. Expansion into MGAs and investments in technology and facilitisation are also going to be part of the mix. This is an exceptionally well-rounded interview with the leader of a business making the most of its best of both worlds position as an independent with the scale and resources to be able to keep up with the larger global broking groups whilst retaining the speed and agility of a smaller business. James is relaxed and is brimming with confidence in the prospects for Miller and the global specialty broking market. A quick listen and a clear picture, as well as lots of market tips and insights, will come into view. Enjoy the podcast. James, welcome back to the Voice of Insurance.
Thank you, Mark. It's great to be here. I can't believe it's 3 years since we last sat here together.
Well, yes, I'm not going to say anything about you, but I'm getting to a certain age where 3 years seems to go past in the blink of an eye. I've just been through 300 episodes, so it just feels like, goodness me, yeah. Since we last spoke, you've been growing really fast. Just give us an update on where Miller's got to in the last 3 years.
Sure. I think it's probably worth going back to remind you of what our original vision was back in 2021, and that talks to the growth we've made. Our ambition then was to really be recognised as the leading specialty broker, and that's when Cinven and GIC first invested into Miller, and that was our plan. Now, what we were able to do is actually deliver our 5-year plan within 3 years, so we really scaled at a speed that was ahead of what we anticipated. But our plan doesn't change, so therefore that continues. In terms of scale, we were £150 million back then. We were through the £300 million of revenue mark last year. So we've more than doubled the business and we've more than doubled our headcount. We've expanded internationally. We've moved into new products, all the things we set ourselves up for in the years gone by. And we just continue to execute on that plan.
And what was the boost that accelerated that plan, or were you just naturally conservative and happy to over-deliver?
There was a slight element of
I think it's very sensible to make sure you under-promise and over-deliver.
Yeah, we certainly didn't push the envelope too far. But I think it was just a realisation of when you gain momentum, what can be achieved. I think on top of that, obviously for the first time with both Cinven and GIC, originally we had the ability to invest at scale at the same time rather than in a much more conservative manner. So we could do a lot more things at once. And that was not a position we'd had before. And then you move that into the M&A market that, again, was something that we'd not really played in. So a combination of all of those factors, plus the momentum we built up.
So you get the ability to do inorganic things to say, right, we can really rip out these whole systems and put in the absolute best, or that kind of things, the things that if you were just working organically from your own retained earnings, you wouldn't be able to do it as fast.
Yes, exactly. And managing everything through a P&L limits the speed of which you can develop the business. So having that access to the support financially that was given to us has enabled us just to scale at a much quicker speed. So a combination of not over pushing the envelope, but also realizing that when we gain that momentum, things just happen at a quicker speed.
Yeah, I suppose the market was pretty helpful too.
The market helped, certainly. Having said that, and I think it really talks to the quality of our growth, I think from a broker perspective, the biggest market tailwind that brokers enjoyed over the last few years has been through the reinsurance space. And as you'll know, we had a very, very underweight position there. And so our growth really has not been as a result of the reinsurance tailwind. It's been in the front end, in the insurance business and in our wholesale business. And therefore, I feel that there's even greater quality to that growth. It's been achieved through real innovation, really working with our clients, cross-selling in a much better way. Now, obviously, that led on to an acquisition we made last year with Orr & Huff Johnson to really scale our reinsurance position. But I suppose the answer to your question is it's been growth without the tailwinds that many others have enjoyed.
So, yes, now you've added the reinsurance string back to the bow because obviously there were historical reasons why. I mean, Miller, prior to the time with Willis, you had a reasonably sized reinsurance division, but that went into what was Willis Re at the time, didn't it? And the history behind that. And now you've got Orr & Huff Johnson, AHJ. It's not called Orr & Huff Johnson anymore, is it? But the AHJ still survives.
That's right. I mean, so back in that Willis transaction, we retained our fact business, but our treaty business went into Willis Re. So we've had that space. Since we removed Willis from our partnership back in 2021, we've been rebuilding into the reinsurance treaty market, whilst we retained our very strong position in the fact market anyway.
And I suppose, AHJ was the last real proper independent that anyone could name, I think, other than the businesses probably more US focused that are still independent reinsurance brokers. But it's quite a feather in your cap to be able to get them.
We were delighted to secure that transaction, but I think it wasn't because they were the last one. I think that's probably the thing to start with here.
No, but I went to a recent event of yours and HJ executives were on stage and they were really happy. They weren't just pretending to be happy. They were happy because they were happy they found you. You found each other, I think.
Yeah, and if you look at AHJ or you look at any of our other acquisitions, and we've now done 6 in the last 5 years, there's a very consistent theme to all of them. The first thing we look at is the culture of the organisation. And AHJ had a very, very similar view on life around us about values, behaviours, ethics, and how we see our own businesses. The second part of that is it's got to be in specialty. And then the third piece is, are they in the geographical regions that we see as important to build it internationally? So whether that be the UK, Europe, or Asia. So they tick those 3. And then the next big hurdle is, do both firms see the value of coming together? Is there real revenue synergy opportunities by joining the firms together? It's not a cost synergy play, it's a growth play. And that's been the same approach on all of our acquisitions. And certainly with AHJ, and the obvious connection is with our fact team. Plugging our fact team into their treaty capabilities, into the client base, has been an immediate success and will continue. But the synergies are not only in the reinsurance space, but I said the key things, the culture, the specialty focus, and the realization that coming together, we would be much better businesses, not just bigger, but we'd be better businesses. And that's what drove that. So we're delighted with that.
And of course, that's only really just getting going.
Yes, any integration takes time. And actually, the AHJ is an acquisition where we already had an existing business. So that integration process is being worked through and progresses nicely. But yeah, we're very pleased with where we are.
And one of the other nice tailwinds, I'm assuming it's a tailwind for you, has been, we've had lots of big strategic changes hitting the US retail market, which may have had ripple effects into the UK wholesale market that deals with the US, which is a very large portion of the London market broking scene. How's it been for you? Has it been a positive that wasn't, obviously, you couldn't have put that in the original 5-year business plan, could you?
Firstly, North America is a hugely important marketplace for Miller and obviously for the London market. What I think is tempting sometimes is to look at what your competition are doing and potentially evolve your plans around that.
Or just do the opposite. Yeah.
We're not doing that. We've got our North American plan, as we've got for the rest of the world and the rest of our business, and we are just focused on executing on that. Now, obviously, we're not ignoring what's going on, and we will pivot and we will adjust our strategy to capture opportunities that we see through activities or events going on elsewhere. But fundamentally, our North American plan is well established. We are continuing to focus on that. We're investing heavily into our North American capabilities, but obviously we keep an eye on what's going on elsewhere.
And how is the current plan, as you've reforecast your 5-year plan, throwing it out into the next 5 years, do you think you can double again?
I do, absolutely. We've shown what can be done. I think the clarity of where we're going with the business, the clarity of our strategy, the clarity of the plans that we've put together over several years now, I think gives tremendous confidence that we can achieve that. You know, what is success here? You can either go down the scale route or you can go down the specialty route. And what we want is specialty with scale. And we've made some good strides on that journey. I think, are we anywhere near the finishing line? Absolutely not. But I think the clear focus we have on specialty and the disciplines we have on retaining that focus, I think really sets us up beautifully for the future. And you underline that with our investor, being GIC, the stability they provide, that certainty of future that they give us. I think you put those together, makes Miller a really, really great place to work and a great partner for our clients.
You've mentioned GIC. How should we think of them? I don't know, maybe it is sort of incumbent on you to see that we've got permanent capital. Is it really like that? Or are they more permanent than other people's capital, should we say, or that they're here for longer term? But in the end, is there always a clock ticking eventually or not?
They've obviously been with Miller now for over 5 years. We've grown together very nicely. We've got to know them extremely well. And clearly, this led to them ultimately becoming our sole shareholder back in 2024 when they acquired the Cinven share. The beauty that they represent for us, beyond everything else that GIC, from a reputation and an organisation and so on, and the support that they've provided, is that stability. There is no exit date. There is no timeline we're working to. And that allows us to invest short, medium, long term. And there's a value for GIC as much as for ourselves in that, and they see that.
And I suppose, the actual, on a technical basis, the holding, it's not in some sort of fund that then has to renew every 7 years.
Absolutely not. So again, that's what we wanted to get to. We saw that as a differentiator for number one, our people, and equally as important to our clients, that we could give them that certainty. What we tell them we're going to do, they can believe in. There's not going to be deviation. We're not going to change our plans. We're not going to go in a different direction. And that, I think, ever more so, and particularly with all the goings on at the moment, I think becomes ever more powerful, the message.
You just said about a specialty at scale. Are there specialisms that you're not in that you'd like to be in, and therefore we should see expansion? And again, maybe if there's some fallout from some of those strategic changes in the US retail space, which have those ripple effects into London wholesale, there might be opportunities, there might be teams looking to come over, that kind of thing.
Yes. Over the last few years, we have invested heavily in specialties we've been in for a long time. We have also diversified the business into other specialties that we saw as very valuable, very Millery in their nature.
It's sort of, you're already in a class and you can go into something that's fairly adjacent. Has that been the strategy?
Yes. I mean, what is specialty? There are 1,000 different definitions. For some of the ones I use, firstly, there is margin, there's value in it, and the client's happy to pay that value because they see the role that the broker plays in ensuring that the transaction, the support, the program, the coverage, etc., is what they need. There is a true partnership there. It's not commoditized. There is real recognition of the contribution made. So that's one of many different definitions of specialty. That's one I lean on. So specialty needs to be sustainable as well. It needs to be a long-term opportunity there. So they're the kind of things that we think about when looking to move into new specialties. But certainly if you look at where we've expanded, I don't think any of them don't look like Millery type product solutions and services. So what that has also enabled is it means we've got broader conversations with our client base. And like every client, they want to do more with less. How can we be better partners to our client base? How can we have more conversations? How can we be delivering even better for them? And by diversifying, we've been able to do that. And that's been a big part of our organic growth story.
When you say Millery, what's Millery then? I suppose what's not Millery?
so what's not Millery is not people-led. Quite simply, the assets of the whole of Miller, and when there are a lot of them now, are our people. And everything else we do and every investment we made is around supporting our people, delivering for our clients, delivering better, more innovative, and more creative, more valuable solutions for our clients, and then servicing them to a level that no one else can. That's the model. That's what Miller does. And I think we do it better than anyone else.
You mentioned about 6 deals probably since we last spoke, or in the last few years. And when we last spoke, I checked on my notes, you'd said about 15 to 20% of your growth would come from M&A. Is that still in the plan? And for one, is there still enough M&A to do? I suppose anybody who's predicted the end of consolidation in any kind of broking market anywhere in the world, often we have these slightly Malthusian sort of predictions that we're going to run out of brokers to buy, and it seems to always be completely untrue. We never run out.
I don't see the end of consolidation as that's part of the question.
Yes.
No, I think it's been around for a long, long time, and I think that will continue. For us, we don't have a specific number on it, I would say, in terms of what M&A represents in terms of our growth story.
And I suppose it's sometimes the opportunities don't always arise. And the things that you want to buy often aren't for sale. And then suddenly you get an opportunity to buy them. And you think, wow, I never thought you'd ever want to sell, or you'd ever sell to me.
And a lot of the acquisitions we've made have been in exactly those scenarios. But they're often from companies where we've had a tremendous trading history with. We've got relationships. We know of them very well. They know of us very well. So the conversations and the development have often been very smooth because there's a very good understanding of both sides. The main focus of the business is growing our existing business, our organic growth, and it is building out the platforms that we've already invested into. If something comes along that fits everything I talked about before, culturally aligned, in specialty, in the geographies we are developing into internationally, then of course we will execute on that. And a good example of that, and remember 3 years ago I mentioned our geographies were Europe, Asia and the UK. We announced a few weeks ago, and we're due to complete this acquisition in Dubai by the end of June. Now, that wasn't in the plan, but again, something came along. It fitted really nicely with Miller. The Middle East is a very important marketplace for us. We've been there a long time. We see the value of having ownership on the ground there. So a company called Shields, as I said, that should close by the end of June. And that'll be a development on Europe for us. It now becomes the EMEA region. But that's a good example. If something comes along that really fits, then we'll do it. But fundamentally, I think for the next couple of years, it will be about growing those platforms we've invested into.
On the international question, are there any other places where you'd really like to be?
Not really. I think at the moment we're comfortable. UK, Europe or EMEA and Asia.
That's a large percentage of the world
economy. That's a big
economy.
area. We've also, which is the first time for us, we've actually opened in Korea rather than acquire. We're building an office there. That's been a great new market to get into. But fundamentally, it's around growing those and building the capability, building the product knowledge and making those as diversified as we can within those specialty tramlines.
Something we spoke about last time also that was a relative novelty, I think, for Miller, or it was a change of emphasis about MGAs. And I think, casting my mind back to the podcast with your predecessor, your arrival heralded a different tone slightly on MGAs. Where are you on that in terms of building out your own platform?
David Robinson joined us. It's a greenfield site, effectively. We see the value in accessing new distribution. Ultimately, that's what that's going to give us. So we are at the early stages of developing that. There's a long way to go. It'll be with the same lenses as we see acquisitions. It's got to be culturally aligned, it's got to be in specialty. It'll be slightly different, but we see there's another growth opportunity there, but we're at the early stages of it.
I mean, obviously, I suppose you're always in a hurry, but you want to do it right.
That's not new to Miller. We will think carefully. We will look at it from every possible angle, and then we'll make the right decision, and then we'll back it for the long term. Again, having GRC allows that.
Because I suppose maybe 3 or 4 years ago, when we were having a very explosive period of growth in MGAs, particularly one serving the US market, I had on my list of standard questions was, what do you think's happening here? Is this sustainable? That question's kind of fallen off my list now, because I think we've established beyond all reasonable doubt that this is actually a permanent change in the way that some insurance is being distributed. And obviously there's technology and other things are behind that. And a talented underwriter can now just be a talented underwriter, and they don't have to be wedded to a balance sheet. They can live or die on their own portion of the value chain. So we don't really have that debate anymore. So I suppose if we were going to have this podcast in 25 years' time, I think we know we'll still have an MGA sector and it'll be vibrant.
Yeah, the concept has been proven.
Yeah.
And I think it really focusing on those with that entrepreneurial drive. That's a really natural, or there's a kindred spirit there with the MGA story. And again, Miller is an organisation, entrepreneurial people
right.
is what we need.
And there's definitely a cultural fit with an entrepreneurial broker and entrepreneurial underwriters. They have a great affinity with each other. And if they ended up working at the same organisation, obviously with the Chinese wall between them, of course, it makes a lot of sense, actually.
Totally agree. And that's our approach. So we looked at it very carefully. And now's the right time to start to move into that.
I should ask you about the market itself. Obviously, when we spoke 3 years ago, the market was very different. We've had market softening since then in insurance and reinsurance, obviously, especially insurance, specialty reinsurance and reinsurance generally, and commercial insurance generally. Is that going to make your targets harder to hit?
Certainly the market is very different from when we last sat down 3 years ago, but our growth has not been built upon a hard market cycle. And equally, therefore, is it going to derail our growth story? The fact the market is no longer in the state it was? Absolutely not. By focusing on the client, our organic growth story doesn't change. Now, clearly, there are some areas where it's slightly more impacted.
I suppose the economics, if somebody was paying 100 last week and this renewal, they're paying 80, but if that is new business to you, it's just 80. It's 80 new to you, and hopefully you get maybe you get your 8 brokerage out of your 80. So that's new revenue. It doesn't really matter. When that's all renewal revenue, then it's painful.
Then it's a different conversation. I mean, we're in that growth stage and we're expanding. So that's different for us. But equally, the ability to plug more products into your existing client base is agnostic to the rating environment per se. So we can just continue to grow with our existing. And I come back to what I talked about from our M&A lens. The revenue synergies is a really exciting growth opportunity that you can only achieve through making those investments in other product capabilities or other organizations. And putting that all together means that we feel very good about the growth story despite what the market is doing.
And what about the submission flows? Obviously, something that does sometimes happen in soft markets or nearer the bottom of soft markets is that a lot of those local markets, obviously, they're healthy, they want to retain more, and they have less need of those excess and surplus lines markets, and they can get those bigger limits back in their local market. That's often a feature at the bottom of a soft market. How are submission flows holding up into those wholesale markets?
In the wholesale markets, the submission flows are still good. We're in this period of perma-crisis now. Rather than isolated geopolitical situations in one area,
it's always what's
it's
next.
Everywhere. And that is opportunity. It is a ever more challenging, dangerous, complex world. There is no chance of world peace breaking out, as far as I can see. And what also you're reminded of frequently is just how small the world is at times. And almost every client we have is being impacted in different ways by what's going on around the world. And therefore, they are looking to us ever more so around how do we help them navigate for their business, for their exposures, for their needs, to make sure they're getting everything that they require from their broking partner. So this is opportunity. That's how we see it. And London market, particularly the specialty wholesale space, has a huge role to play here. And so hence my answer that deal flow is not dropping off. Having said that, when I come back to our international strategy and our international growth, that gives us access to the local market. So where there is a more suitable solution locally, we're agnostic around where the business is, but it's about what's right for the client. And so that's been part of our international strategy and why we've done that.
Yeah, of course, because I've been part of that world where I've been in one of those outposts, and you can feel that kind of clamour for London to say, why aren't you selling the business to us? Well, if I can place it locally, it's far easier. My client's much happy with that. And of course, everything's quicker. Premiums and claims are going to be paid much quicker and the things placed much quicker. If you could do it locally, of course you would. So again, you wouldn't deliberately send it to London just because it's better for the broker, because you might make more brokerage that way. I mean, it doesn't make much sense for the
It
client.
only makes sense if you've got no other option but to place it in the London market. So we don't have that challenge, and therefore you can truly do what's right for the client, which is what we're here to do.
And where are you seeing the best growth at the moment in terms of any classes and geographies that are particularly robust?
As we touched on at the beginning, our growth for Miller, I think, has been pretty dramatic in terms of where we are from where we started a few years ago and where we are now. So we've only been able to get there through every part of Miller growing. We haven't had one particular area outperforming the rest. We've had really, really positive growth across the business, both here in the UK and all around the world. So I couldn't call one out particularly and just say this is outperforming. Obviously, the revenue synergies, the opportunities we're getting through our acquisitions, and the Shields one in Dubai that's about imminently to land for us. Again, that opens up a whole new world of opportunity and really exciting opportunity for us. But I think fundamentally, our view is that we have growth potential in all of our product capabilities and in all of our geographies. And that's really talking to the focus we have on specialty.
And also, since we last spoke, the world of digitalisation, facilitisation of the London market has really taken off. And if I talk to any of the top brokers around these streets here in London, everybody's got a facility or multiple facilities. How important do you think those things are going to be going forward as an underpinning? I suppose, the next time you double in revenue, I presume you hope not to have to double in headcount every time and, improve that productivity.
Yeah. So auto-follow facilities are here to stay. There's no question. I think that's been proven. I think that's an important next step for us at Miller to bring that value to the clients. We hired Paul Cumberland as our new chief broking officer who joined back end of last year. So we didn't have that function before.
Yeah.
I think it's another good example of, as a business, how we're maturing, how we're developing. And within Paul's scope is to develop our auto-follow capability. Now, we are probably last of the table on that, but I think the benefit there is we are designing a solution that is very Miller in its design, and it will be the best solution in the market.
Yes, I mean, you won't get eaten by bears, will you?
We won't get eaten by bears. No, we will take the best of everything else and make sure that this is what delivers the most value. The most important thing here, what is it doing for our clients? It's giving that certainty of coverage, the certainty of capacity, certainty of price, and efficiency and everything else that comes with the ability to place business that much quicker. I think from the carrier side, of course, it gives that concentration of premium, that certainty of opportunity.
I think you had a wonderful diversified right from day one.
There's no selection, anti-selection or selection, whichever way you want to look at it. So I think it works for everyone, and hence the long-term future for these auto-follow facilities. So we are developing that. We are nearly at launch stage. That will come out later this year. And again, it's just another exciting development for us, and it shows an area that we still haven't really tapped into yet, but Paul is doing a great job on leading that for us.
Yes, and of course, we couldn't have done this 20 years ago, so we just didn't have the tech to do it, and now we do. And you've got that investment in place, and you've got people like Claire Lebec also looking after all of your back office systems, which is really interesting. Somebody from a very senior position who held that very senior position on the market, actually trying to do that on behalf of the whole market, which is obviously far harder.
Yes.
So how's it been going with AI? I think 2 years ago I would have asked you, what do you do with AI? Or what are you planning on doing? Or what are the experiments? And now the next iteration of that question is, what have you done with it and what's worked the best? Which ones are you really doubling down on? And then looking from here, what would be in the next 5 years?
Yeah, I've got a few views or answers for you on that question. I think firstly, I get a sense really that there's quite a lot of people who are scared of AI. It's seen as a threat, and that's not our view. We see AI as an opportunity to improve what we do, and fundamentally for the client, that is. And again, sort of on a similar theme, there's a lot of messaging out there where CEOs are talking about their companies being winners out of AI. I would tweet that our clients will be winners out of the investment we make into AI, because that's the only reason we're going to make the investment. Does it give them something different? Does it give them something they value more? Does it make us better partners to them? So that's our client lens in terms of our AI investment. So what is going to help them? In terms of internally, now, of course, we're using AI where we can to take on some of the tasks and the mundane tasks that allow us to redeploy our people to focus more on clients. And that's the investment. That's where the compound value of this investment. So there's an internal look around just allowing us to spend more time looking at the things that our clients value, as opposed to the things that can be automated through AI. But then really it's around what can we invest in? What is going to give our clients a better outcome? And that in turn makes us a more valuable partner and makes us more successful.
So it's much more about ingesting a lot of dull information and not having to rekey it, the kind of putting that into some form of structure.
How do you make our colleagues' life more efficient? The things that are just volume plays that really there's clearly important job to be done, but can we automate those? Can we use technology to help us?
And things that waste time. I think, oh, goodness me, I'm going to have to give this to poor Office Junior is going to have to rekey this whole thing, and there's going to be errors, and we have to double check them, and it's going to take 3 days, and now we're able to do it all in 10 minutes.
Absolutely. So we set up a couple of years ago a thing called Miller Labs. We've built over 30 AI apps that colleagues can have access to that ultimately are all designed around what can they now have that enables them to be more efficient in their role. And again, that time that you create or that time you save, the focus therefore can be on the client.
And then I suppose sometimes you give people these things and then they end up creating their own tools, don't they?
Yeah, and that's the balance. And then the wider challenge here is behavioral change, because you can have all the available solutions and technologies, but if people aren't using them and people aren't taking the benefit and the advantage of these, then you end up spending a load of time and money on something and actually not getting the benefit. So there's that behavioral journey that you need to take people through as well, and the awareness journey. But ultimately, if people, and Miller people are this way by definition, but if you are permanently thinking about how we can do something better from the client, you will want to think about how can I use AI to make my role even more valuable.
Yeah, I think people of our generation, we don't automatically think that way, but I think people who are just coming into the labour market today, they will automatically think about, well, what does ChatGPT think of this?
Totally. And so there's that nice balance, even though, there is a concern about the workforce potentially going to be within the insurance space, and how do we bridge that gap between younger generation and their natural affiliation with AI and tech, but also that knowledge and that experience and the understanding that the much more experienced people have had. So bridging that together is something that we've got to really focus on, and we're doing that. But equally, changing the way you do things is a mindset. You either have a choice to not make the changes, or you have a choice of, okay, I can still adjust what I do, no matter how long you've been doing it.
And no matter the state of the market, certainly the last 10 years particularly, there's been a lot of cultural change in the London market anyway, and in the global insurance market since we've had this insurtech phenomenon, and things like the Lloyd's Lab. I didn't know there was Miller Lab.
Yep, Miller Labs.
These are completely disregarding the state of the market. Do you think at the moment AI is going to enable a lot of new products to happen? Because the way that we can access this data, do you think we'll be able to insure things that weren't insured before? For example, because one of your brokers can go to an underwriter with a really interesting and quite fleshed out proposition to say, have you seen this? And that underwriter can then go away pretty quickly and verify that independently and say, you know what, this guy's got a point here. I don't know. I'm particularly optimistic about this. We're on the cusp of, we've got a market that's ready to go and has the right attitude culturally, also very well capitalized and great risk appetite, and a great place where you can syndicate this risk and so you don't have to bet the farm on anything. I'm really optimistic and excited about the possibilities. Are you as excited?
I am. I think this is exactly what the London market particularly is all about. This is an emerging, developing risk opportunity, and it's a moment for the market to step up to understand what is now an emerging or developing risk exposure, to develop wordings or coverages that give the clients what they need now with certainty, that they know that the claims are going to get paid if and when this happens. And that is, for hundreds of years, that's what particularly the London specialty market has been all around. There is change. How do we make sure our clients aren't left standing alone here without the protection they need? And so really this is a call that, okay, yes, these risks are changing. Let's make sure that we are giving the clients what they want.
What about AI as an emerging casualty peril? It's really interesting. I mean, it's currently a silent peril. It doesn't look like it's going to be silent for very, very long. I was reading some reports about US ISO wordings and different endorsements coming in certain classes over there. We'll see what happens. But what do you think about that as a potential to be another growth engine as probably a standalone class?
Exactly, per my point I just made. I mean, this is a new risk. So a bit like silent cyber, what's the answer? We don't want to be in that unknown grey area. We need to get on the front foot. We need certainty of coverage. People can buy it with confidence, knowing that if and when this scenario happens, they're going to be made good by the market and the policy premiums they're paying are worthwhile investing into.
So you think it's likely to become a standalone thing? Because there's obviously the question that AI is already becoming so embedded in everything. You think, well, can you actually exclude it anyway? Because how do we even know what was AI and what wasn't?
And this is where we need our market leaders to really stand up. This is the opportunity.
For example, if you're a lawyer, lawyer's PI, solicitor's PI, errors and omissions insurance for insurers, ultimately, if there is an error or an omission by your lawyer, it's their fault and they have to take responsibility for it. Whether that was because they did it manually and made a good old-fashioned mistake and forgot about something or forgot to file a claim or whatever it is within the statute of limitations and sort of things that happen, or the AI forgot to do it or the AI did it wrong, does it really matter? Because ultimately they're still responsible, and, someone's ultimately responsible for that decision and those actions. So do you think it might be difficult to exclude?
Yes, I think it will be difficult to exclude, and ultimately we should be looking to include it and find a way of doing so. That's the next stage of this coverage, isn't it? Or that particular policy you're talking about. In 2026, that's what we need.
I suppose, yes, you need to be on the front foot and saying, okay, we know you're using AI, you have to be. Everyone's using it. So now we want to know how you're using it, what you're using it for, and then we'll explicitly give you a limit for it.
Exactly how it should be.
James, I think I've come to the end of all my questions. I don't know if there's anything you want to add before we sign off.
No, just thank you very much for having me, Mark. As I said, I can't believe it's 3 years since the last time we sat down here, but hopefully not as long until the next time.
Well, at least we'll have to set our watches for at least, I hope, 2028 rather than 2029.
Yes.
Or maybe 2027. Thanks a lot, James.
Thank you very much.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this programme. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance is produced in association with Advantage Go. Release your underwriters to underwrite with Advantage Go's underwriting platform. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.